Do not react to the market. Do not panic. This is the time to capture opportunities. Hey guys, welcome to another video. Thanks for joining me in this one. So in this video, I'm just going to share my thoughts about the new information that we are getting in regards to the inflation data. If you're new here, my name is Stephen Ojo, and currently I'm on a trip and I decided to, touch base with my channel and you guys and let you know what my thoughts are. So if you're new here, consider liking the video, please. And of course, don't forget to subscribe also. All right, so as we all know, inflation is still the hot topic of the day. The stock market is taking a deep dive. The Dow is down about 1,000 points, about 4% down. S&P is down about 4% as well, and still heading downwards as well. The Nasdaq is down about almost 5%, and the Russell is about almost 4%. So pretty much everything is red. All the stocks are selling off. Now, the truth about it is that inflation has always been in the news, and it has continued to put a lot of pressure on the stock market, which is not really the main point. The main reason why this is happening is because of the fact that the Feds are going to have to force higher rates on the market. So they will have to increase interest rates. The Labor Department on Tuesday reported its consumer price index rose 8.3% in August from the same month a year ago, down from 8.5% in July and from 9.1% in June, which was the highest inflation rate in 4 decades. On a monthly basis, the CPI rose 0.6% in August, double July's pace. The core CPI, all right, the core CPI rose 0.6%, which is one of the factors that is really driving the stock market to react the way it is right now, because that means the Feds will have no choice but to increase rates at a higher pace in order to get inflation down. What people were speculating was that, they will have to increase it by either 0.5 or 0.75. But with this information that we're getting up from the CPI, with interest rates going higher, then they have a higher chance of them increasing it to about 0.75, which definitely will drive the stock market even lower, which is what is already being priced in the market today. Now, in my opinion, I believe that this is going to continue. The stock market will be very unpredictable for the next week or so, considering whatever other news may develop. Remember, we still have Ukraine going on with war in Russia, which that could significantly change the course of where things are going, depending on how things develop in that area. The other aspect of this is that the prices of food and energy is projected to, probably change, because remember, if energy prices continue to rise or changes course of direction, that will affect the cost of food as well. So that could drastically change the outcome of where things are going. And I'm not here to predict what the stock market is going to do. But my information with you and to you today is, you need to sit back and look at what your own plan is. The goal here isn't to time the market. The goal is to capture the market when it presents its opportunities. Now, with that said, the other thing you have to consider is your own risk tolerance to what you are putting your money in. If you're putting all your money into something that you don't have the tolerance for, the risk tolerance for, then you probably biting too much than you can chew. And that's why I would encourage that you look at your time horizon, see how much time you have in case the market goes, down 50%, for example. Then you want to see, okay, do you have the time to recover from that? Because the truth is that based on history, based on what the stock market is, and based on what we know, it will recover. It's just a matter of time. How long, we don't know. And since we know that the companies that we believe in are solid companies, if you do have some of those, then why don't you invest in those companies with a lot of cash on hand? That is very important, because in a market like this with interest rates going up, a lot of companies that are relying on credit, on loans to survive, will be impacted. And if things continue to get worse and interest rates continue to increase, that would definitely drive those companies out of the market. And that's why you want to stick to your solid companies that have existed for some time. They have the ability to withstand, higher interest rates, because they have a lot of money on the side. That is very important. As we speak now, the stock market is dropping like crazy. I'm actually looking at it right now. The Nasdaq is down 5%. The S&P is down for almost 4.5. The Dow Jones is down about 4.1. and it's getting worse. Do not react to the market, because when you make reactions, when you react in these situations, you will end up losing money, and that's not what you want to do. Your goal here is to focus on your plan. Have a long-term plan, 3-5 years down the line. Where do you see these companies you're investing in if you're putting your money in single companies? And if you're doing the index, then I feel like you should relax, considering that, assuming you have the time horizon for it, the things will turn around again. Do not react to the market. Do not panic. This is the time to capture opportunities. If you're new here, don't forget to subscribe. Don't forget to like, please. And of course, I would love to see you in my next video. If you have any questions, please leave it in the comment section below. And of course, if you have any suggestions, leave them in the comment section below as well. I would love to read them, and I would love to see you in my next one.